Interest rates are now pushing 7.5. This cannot be sustainable with home values staying stagnant. Predictions are interest rate drops next year, but will just result in highly competitive situations and escalating home prices. Without a boom in inventory, not gonna happen. What can be done? Every average American is being priced out of homeownership. People said this when it got over 5.5. Talk to me next year when rates are 9. I'm seeing a lot more building where I live, Charlotte, NC suburb. They are selling pretty quickly too, likely because of builder financing incentives. I don't understand the economics at the moment. My house in a HCOL or will rent for maybe 4.5k month, but a mortgage with 20 down would cost the buyer 7-8k. Why would anyone buy in this environment? Even all cash buyers. There's 5 yields. Risk-free. I just don't get the math at this point. If home prices don't come back to reality, it will change the entire landscape of the economy. If everyone's income is going to housing, other parts of the economy are going to suffer in a seismic shift. Buckle up. Doomsday ain't comin' soon. Market moves down slowly. A full-on crash is highly unlikely at this point. People said it was a bad time to buy in 2020. And then again in 2021. And also in 2022. I just don't understand why people think rates will fall so dramatically next year. Either inflation cools to target rate and Fed slowly backs off rates and continues to monitor inflation, or recession and they do drop steeply, and in this case we aren't buying. This concept of it hitting 2024 and Feds just cutting the FF rate back to 1 doesn't make sense. They haven't even announced what their target rate is if they get inflation to cool. Rate decreases take time. Correction. Every first-time homebuyer is priced out of homeownership. Those already in a home probably has an interest rate less than 4 and am feeling lucky. And people will keep buying even if we get close to 10 lol. This economy is absolutely crazy, and with the chances of a crash being near impossible, I wonder what it would actually take for shit to really hit the fan. The price of renting now and a mortgage is literally the same where I live lol. Like WTF is that? The point of the higher interest rate is to slow the economy and bring inflation down. The interest rates will stay high until then. They could even go higher. I closed yesterday at 6.99. I was disgusted by the rate, but seems like it could have been worse. I pray the rates keep rising till the home prices start falling. It a slow crash. Most all the bubble cities have fallen over 10 since the peak in May 2022. Austin is over 15 down. China is imploding. EU is in a recession. MFG is in a recession. Be patient. BlackRock stopped buying recently. I bought my first place in '89. Did not break even until 1995. Look at credit card debt. Wage inflation. Maybe add something similar to the mortgage interest deduction that is targeted for people living in the house, and also only for the first $750,000, or maybe some other limit like only if you own a single house, so people can't just rent out their old house. My loan officer told me don't worry. Interest rates will normalize back to 3-4 in about 4 years. That wasn't my reason for buying. But I also don't see the rates coming down anytime soon. It seems like we will probably be around 9 to 12 interest between the next 5-10 years. I'm seeing lots of decreases in asking prices in my area. Some houses up to 60k down from 6 months ago. Not in the business, just watching the market and hoping to buy eventually. I don't know, but personally I'm just going to buy as soon as I can afford to and hopefully refinance when the rates do drop. Going to keep continuing until the real issues such as wage stagnation and consolidation of wealth, are addressed. It's no coincidence that since the 1980s, despite massive gains in productivity, wages are suppressed and homeownership had become tougher and tougher. Add in market disruption of single-family homes becoming venture capital investments in hotels via Airbnb, and it's going to continue until addressed by policy. There is about one house coming onto the market in my area each day. It gets snapped up immediately. The only houses not selling are over 1 million. So frustrating. I think the only good solution is for wages to slowly catch up with home prices. Otherwise, if the housing market crashes, new homes aren't being built and people move back in with their parents or whatever backup plan they have, while investors nab up all the properties, leaving us with an even smaller inventory than before, which would just make the problem that much worse when people come out of whatever recession causes the crash in the first place. And nobody will be able to find housing and everyone becomes renters. I guess I don't see how a downturn would help this situation. It would just be handing more properties to the rich. This sounds like rent is going to go up again. The Fed has been signaling they'll likely keep raising the Fed rates. I really don't think mortgage rates will go down anytime soon, maybe in a couple years. Honestly, I think the only real option is some pain for a while and to have wages finally catch up to where values are at now. The reality of inflation is they're intentionally trying to get people to buy less and have problems buying things. That's the whole point of raising rates. It's not bloodless. I am hearing talk of 8.59 by end of year. Man shrugging. Just locked 7.125 with zero cost closing. We are still at or below the average interest rate for the last 30 years. It's just a method to steal equity from reverse mortgages. They talk about the greatest wealth hoarding by boomers, but they're all getting robbed on the back end by their neg-ams. Why would interest rate be lowered if economy is doing just fine? This cannot be sustainable with home values staying stagnant. The converse could also be true. Home values cannot stay stagnant if interest rates continue to climb. I'm about to sell a house and I've been told everyone is expecting a rate buy-down credit. After speaking with my client and other local agents, a buy-down costs 2 of the sales price and will lower the rate by 3.213 in year 1. 2 in year 2 and so on. So a 7.5 is 4.5 in year 1, 5.5 in year 2, 6.5 in year 3 and 7.5 in year 4. All in, with 6 going to agents. I'm doing 4 to get the deal and 2 going to a rate buy down. Everyone should be happy. Prices are $97,110 of list in my market. Inventory is starting to pile up in many areas. I think supply is going to finally get up to 6 months of inventory for a lot of the country until rates drop significantly. My childhood next-door neighbor is selling their house for $1.3 million. That's an $8,000 per month mortgage with $12,000 in property taxes, so $9,000 a month times 40 needs a $320,000 income. The more stubborn the private market, the more interest rates will go up. If cars and houses, along with other goods, don't come down in price, then interest rates won't also. This is literally a battle of the Fed-only tool versus corp boards, private dealers, etc., refusing to take a hit on their bottom line. Yeah, I can't wait to see rates over 15 soon. Prices are too high, and they will need to come down because of these rates. That said, these are pretty historically average rates. People have been massively spoiled for the last 13 or 14 years.